Are you being sold a gold and silver IRA that protects your retirement, or a fee machine that quietly eats it alive while you sleep? Because today, I'm going to show you how precious metals IRAs really work in 2026, what the salespeople don't tell you, and how to tell a smart hedge from an expensive trap. Most people looking up gold IRA or silver IRA right now are worried about the same thing. They don't trust the stock market, they don't trust the dollar, and they want something real sitting behind their retirement. But the second you type gold IRA into Google, you're hit with celebrity ads, free silver offers, and big promises that sound safe and simple. And almost none of them walk you through the fine print that actually decides whether you win or lose. So in this video, we're going to break down in plain English what a precious metals IRA is, how the IRS rules really work in 2026, the real pros and cons, the fees no one brags about in the commercials, and a simple checklist to help you spot red flags before you move a single dollar. Let's start with a basic picture so we're on the same page. A precious metals IRA is just a self-directed IRA that holds physical gold, silver, platinum, or palladium that meets strict IRS purity rules, instead of only holding stocks, bonds, and mutual funds. On the surface, it works like a normal IRA. You put money in, you get tax benefits, the assets grow inside the account, and you pay taxes when you pull the money out, depending on whether it's a traditional or Roth setup. The big twist is what sits inside the account. Instead of shares of an ETF, you've got actual bullion bars and coins sitting in a vault under the watch of an IRS-approved custodian and depository. You do not get to keep this metal at home. If you try to buy it inside an IRA and stick it in your closet, the IRS can treat that like you just took a withdrawal, hit you with taxes, and maybe penalties if you're under retirement age. So, why are so many people suddenly interested in this? Look at what's happened the last couple years. Gold and silver have been bouncing around at record and near record prices. Big headlines keep warning about inflation, debt, and currency risk. And a lot of retirement savers are looking at their 401k and thinking, if this blows up, what else do I have? That's where the Protect Your Retirement with Gold pitch slides in. It promises safety, inflation protection, and diversification in one product, and it uses that fear to move you from a cheap index fund into something much more complex and often much more expensive. Now let's zoom in and talk about how these accounts actually work in 2026. Because there are some very specific rules that can save you or destroy you. First, contribution limits. In 2026, total IRA contributions are capped at $7,500. If you're under 50, and $8,600 if you're 50 or older. Across all your IRAs combined, including a precious metals IRA. That means a gold or silver IRA doesn't give you extra room, it just changes what you hold inside that same tax-advantaged bucket. Second, only certain metals qualify. For gold, the IRS wants at least 99.5% pure. For silver, at least 99.9%. For platinum and palladium, at least 99.95%. Certain coins, like American Gold Eagles and American Silver Eagles, are specifically allowed, even though their purity is a bit different. If your IRA buys metals that don't meet these rules, the IRS can treat that purchase as if you just took money out of the account, and that can mean income tax plus penalties if you're too young. Third, storage is a big deal, and this is where home storage IRA schemes get people into trouble. The rules say IRA-owned metals must be in the physical possession of an approved trustee or custodian in an approved depository, not in your safe, not in a home safe deposit box, not under your mattress. In a tax court case and later guidance, courts and the IRS made it clear. If you personally hold IRA metals, that's a taxable distribution, period. So, when you see someone online say, you can use an LLC and keep your IRA gold at home, Understand that this is exactly the kind of thing the IRS has warned against, and you don't want to discover that only after an audit. Now, you might be thinking, okay, fine, I get the rules, but what's in it for me? Why not just buy coins and stash them myself? Here's the real trade-off. Inside a precious metals IRA, your gains grow without yearly capital gains tax. You're not paying tax on every price move as long as the metal stays inside the account. With a traditional precious metals IRA, you may get a tax deduction up front, and then you pay ordinary income tax when you take distributions in retirement. With a Roth precious metals IRA, you pay tax on the money now, it grows inside the account, and qualified withdrawals later are generally tax-free. That matters because if you hold physical gold or silver outside an IRA and sell at a profit, the IRS usually treats that as a collectible, which can mean a higher long-term capital gains rate, up to 28% at the federal level. So the IRA wrapper lets your metals grow without that collectibles tax hit each time you sell or rebalance inside the account. The tax shows up later when you pull the money out. So far, sounds decent, right? Tax benefits, diversification, something real in a vault. But here's the part the commercials whisper or hide in the fine print. A precious metals IRA almost always has more moving parts and more costs than a basic IRA full of index funds. You've got a custodian fee to keep the account open, a storage fee for the vault, possible transaction fees every time you buy or sell, and the dealer's markup when you buy the coins or bars. Typical annual fees for a gold IRA often run around $160 to $200 for admin and storage, and that's before you even look at spreads. On top of that, some dealers sell metals into IRAs at very high premiums over spot, especially special or exclusive coins, then buy them back much closer to spot, which can quietly drain tens of thousands of dollars from a large account over time. Let me paint a simple picture. Say you roll over $100,000 from an old 401k into a gold and silver IRA. A clean, low-cost setup might charge a one-time setup fee, maybe a couple hundred a year in admin and storage, and sell you standard bullion bars and coins at a modest premium over spot. A bad setup, on the other hand, might push you into high markup proof coins or limited edition silver rounds 50 to 100% above spot, while still charging annual fees. On day one, you think you own $100,000 of metal, but if you tried to sell it back to them, you might find out you effectively have $60,000 to $70,000 of metal value because of the huge spread. In that case, the risk is not gold or silver themselves. The risk is the structure and the sales pitch wrapped around them. Now let's talk about the emotional hook that gets most people. The pitch usually sounds like the dollar is dying, the market is rigged, banks can't be trusted, move your retirement into hard assets before it's too late. There's some truth in the concerns. Debt is huge, inflation has been a real issue, and metals have a history of acting as a hedge during crises. But fear sells, and a scared investor is more likely to say yes to a complex, high-fee product if it feels like a safety blanket. Your job is to separate the real use case from the emotional manipulation. So what are the real pros of a precious metals IRA if you strip out the hype? First, diversification. Metals don't move the same way as stocks and bonds. So a small allocation, think single-digit or low double-digit % of a portfolio, can help smooth out some shocks over the long run. Second, tax advantages. Gains inside the IRA grow without yearly taxable events. That's especially interesting if you would otherwise be paying high collectibles tax rates on physical metal trades in a taxable account. Third, professional storage. You're not worrying about home safes, theft, or insuring physical coins yourself. The depository handles security and insurance, and the custodian handles record keeping. Now the cons. The stuff you really need to see in daylight. Metals don't pay income. They don't produce cash flow like dividends or interest. Your return is purely price change, and that price can be very volatile. Gold moved by more than $1,000 per ounce between mid-2025 and early 2026 which is a wild ride if you're all in. Fees are higher than a normal low-cost IRA, and they never sleep. They eat into your returns year after year. You also give up some liquidity. To sell, you have to go through the custodian and depository, not just click sell on your brokerage app. And finally, the regulatory risk on DIY structures, like home storage or funky LLC setups, can blow up your tax benefits if they're not done in a way the IRS accepts. So, how do you tell if a precious metals IRA is right for you, instead of just a shiny distraction? Start by asking a few blunt questions. 1. What's my real goal here? If your goal is to hedge a part of your retirement against inflation and currency risk, a moderate allocation to metals might make sense as one piece of the puzzle. If your goal is to bet everything on gold because the world is ending, that's not a plan. That's emotion running the show. 2. What am I giving up? Every dollar you move into a metals IRA is a dollar that's not in stocks, bonds, or other assets that might grow faster over the long term. Over-allocating to metals means you're taking on a different kind of risk. The risk of underperformance if metals go sideways for a decade while other assets climb. 3. What does this specific company earn if I sign with them? Before you sign anything, ask the company to spell out in writing all setup fees, annual custodian fees, storage fees, transaction fees, and typical buy-sell spreads on the exact products they plan to put in your account. If they dance around these questions, or if they push you into high premium proof or collectible coins because they're safer from government confiscation or more private, treat that as a huge red flag. 4. How easy is it to get out? Ask about how you sell. Do they guarantee a buyback? At what kind of spread to spot? How long does it take to settle? Are there extra fees when you liquidate? Let me give you a simple mental framework to test any metals IRA offer. Step 1. Strip out the emotion. Ignore the scary music. Ignore the dramatic stories about currency collapse. Step 2. Compare it to a plain IRA full of low-cost funds. Your plain IRA might cost you a tiny expense ratio each year. Your metals IRA will have multiple layers of fees plus spreads. Step 3. Ask, if metals do what I think they'll do over the next 10 to 20 years and I pay these fees, am I still happy with the outcome? If your answer only works when metals go to the moon and it falls apart in any other scenario, you're not hedging, you're gambling with more friction. Now, let's talk about the biggest mistake people make when they roll over into a metals IRA, because this is where the story often hits the climax. They rush. They see an ad, they call the rep, sounds confident and friendly, and within a week, they've moved a lifetime of savings into a product they don't really understand. 6 months later, they see their statement and realize that the day they funded the account, they were already deep in the red because of huge markups and fees. At that point, they feel trapped. Do I sell now and lock in the loss? Or do I hold and hope gold saves me? You don't want your retirement to rely on hope. So here's the real key moment. A simple checklist you can run through before you say yes to any gold or silver IRA. 1. IRS rules. Confirm that the metals they plan to sell you are actually allowed. Check the purity, check the coin type, and make sure they're using an IRS-approved custodian and depository. 2. Total cost. Add up setup fees, annual fees, storage fees, transaction fees, and estimated spreads on buy and sell. Look at what those costs add up to over 10 or 20 years on the amount you plan to invest. 3. Product type. Prefer simple bullion bars and well-known bullion coins over fancy proofs and collectibles. Hype usually hides higher spreads. 4. Allocation size. Keep metals as a slice of your retirement, not the whole pie, unless you've really thought through the risk of concentrating everything in one asset class. 5. Exit plan. Know ahead of time how you'll rebalance, when you'd trim or add, and how you'd handle it if metals go through a long flat period. If you can't answer that, you're not investing, you're reacting. At the end of the day, a precious metals IRA is just a tool. Used carefully, with clear rules and low-cost providers, it can give you a tax-advantaged way to hold real metal as part of a diversified retirement plan. Used blindly, driven by fear and slick marketing, it can quietly siphon away years of your hard-earned savings through fees, spreads, and bad structures. The metal isn't the enemy. The enemy is not knowing the rules, not seeing the costs, and trusting the wrong people with your retirement. So if you're thinking about a gold or silver IRA right now, slow down, pull out that checklist, and make sure the move actually fits your bigger plan, not just your fear of the headlines. And if you want to go deeper on how taxes work on gold and silver outside an IRA and why that 28% collectibles rate matters, go watch the next video on your screen. If you want to help support this channel, check out the links in the description. They include, based on everything we've just covered, my pick for the best precious metals IRA company. If you want to know why this company stands out as the best, check out the video on your screen where I spell out all the reasons. And if you got value from this video, hit like, subscribe, and ring the alert bell so you never miss the next update. See you next time.